Hello, everyone. This is the Free American Press with your host, Alexander Horat. Today, we're going to be having the president of Miles Franklin on the show, Andy Schectman. But before we get into it, if you could please subscribe to the channel and like the video, that'll be really great. Hello, Andy. Thank you for being on the show.
Alex, good to see you, my man. How you doing today?
Oh, I'm doing pretty good. So I was thinking last time we talked, we were talking about Basel III a little bit and the implications of what that would do to the gold market. So we saw that that has gone through and it's now been implemented. So I was just wondering what effect this is having on the gold and silver market.
Well, first of all, let's clarify something. Let's go back and talk a little bit about Basel III, and then you're kind of right in what you said, but kind of wrong. So let's make sure we get this straight. First of all, it's a joy to be here with you every Friday. I just want to say one more time that, I appreciate a young man like yourself doing what you're doing, educating the youth of America and abroad. You're a 17-year-old young man, and I admire that. And that's why I take the time out of my Fridays to pay it forward, because I admire someone your age, and it's a joy and an honor to be here with you first and foremost. So secondly, I'd like to wish everyone a happy July 4th weekend out there and a good holiday, and hope everyone is safe and has a great weekend. Now, to your question, Basel III. The one thing I want to take away from Basel III is maybe the most relevant or most important event of my career. For almost 70 years, the US dollar was the only tier one asset as far as central banks are concerned, reserve asset. And you can think of that as a riskless form of collateral. In other words, let's say you took out a loan for $1 million and you needed to post 100% collateral. A bank account with $1 million would be riskless. There's no risk involved. If the bank lent you $1 million, but you had $1 million in cash in a bank account backing it up, an escrow, no risk. There's only been one of those tier one assets, that being dollars, since 1944 until April of 2019, when the Basel III Accord levied gold to the only other tier one reserve asset in the world, the only other tier one, categorized as a riskless reserve asset, on par with cash. Huge. Okay, that's huge. And the fact that the central banks have been massively accumulating it over the last 4 years is even bigger. You're seeing the most sophisticated, well-funded entities in the world, the central banks, gobbling it up. And just the other day, some of the central banks that we saw, in fact, let me see if I can quickly tell you which one it was. Sorry to put you on hold here. I know it was one of the Asian banks, I believe, bought 90 tons. It was, let's see here. Bear with me. The Central Bank of Thailand just ordered 90 tons of gold in April and May. And the Bank of Hungary tripled its gold reserves by adding 63 tons in May. So you're talking the biggest money in the world has been gobbling up gold month over month over month over month for the last 4 years, but they reclassified it as tier one. Originally, it was the German National Bank, the Bundesbank, that brought all their gold home from the New York Fed and the Bank of England, the Dutch National Bank, the Bank of Hungary, Turkey, Austria, Poland. They all started bringing back their gold from the Fed and the Bank of England, and then going on a buying spree. And now you're even seeing it go to these smaller banks, like the Bank of Thailand and like the Bank of Hungary. They're gobbling it up. So that, first and foremost, when I think of Basel III, that is the biggest takeaway from it, is that it's now there are two tier one assets, dollars and gold. And the Bank of International Settlements, which is the central bank or central bank, Alex, they wouldn't have taken the time or effort to levy gold to a tier one asset if it wasn't part of what's coming next. Okay, so I think that they look at that as a very substantial, important piece of whatever's coming next. Now, what you're talking about is a little bit different. Part of the Basel III agreement has to do with reserves and what can be on your balance sheet as it relates to unallocated gold holdings. Without getting too deep into it, the unallocated gold holdings used to be calculated at 100% on the bank's balance sheet. So they can have an unallocated position, which means it's a paper position backed by nothing, and count it as 100% on their balance sheet. Now, the first thing that happens is it now goes to 85%. Immediately, they get a 15% haircut on their balance sheet for unallocated holdings. Fully allocated gold holdings, physical holdings in a vault, because it's tier one, now that's counted at 100%. But even more substantial is that 85% allocation on the balance sheet from 100 is bad enough, but now when measured against liabilities on the balance sheet, it counts at 0. So the bank has less and less and less incentive to take in very large speculative unallocated positions, because not only is it risky, not only does it denigrate your balance sheet, but when factored against liabilities on the other end of the balance sheet, it goes from 85% valuation to 0. So the banks will have much less incentive to do this. Now, you said it happened on June 28th. It did, but only in the European banks and Switzerland, which is a European bank also, but they're not part of the European Union. The United Kingdom, where the London Metals Exchange is located and is a central target of this unallocated, it's called the net stabilization reserve requirement ratio, something to that extent, doesn't go into effect in the UK and the United States until January 1st. So you got the banks in London that comprise the majority of the London Metals Exchange and the big US banks, JP, Goldman, Citi, they all can continue to do what they're doing until the end of the year. This only went into effect for the European banks and the banks in Switzerland, with the exception of the United Kingdom. They are not in it, or the US. So what I think happened is a fuse was lit. I think we talked about this the other day, in that by now imposing these reserve requirements on the European banks, it's the beginning of hopefully real price discovery once all of the banks globally have to comply with Basel III. So just to recap what we've said, to me, the big takeaway, Alex, is the fact that the most influential bank in the world, the central bank or central bank, reclassified gold as the only other tier one. And 2 years before and ever since, the central banks have been repatriating their gold from the Bank of England and the New York Fed and copiously accumulating it. Tells me you don't have to see anything else. Everything else is noise. But when you see the most sophisticated, well-funded, well-informed, influential traders on the globe reclassify gold as the only other tier one reserve and buy the hell out of it 2 years before, that's called front running, and buy it after and continuing to do it now, that's the real takeaway. As far as the reserve requirements, I guess we'll have to see just how big of an impact that makes at the end of the year. There are a lot of people, Alex, who think it's a real big deal, that it will finally lead to real price discovery, because both the London Metals Exchange and the COMEX are fractional, rehypothecated, synthetic, unallocated gold, where in the London Metals Exchange, it's 1 to 100, 100 to 1 leverage, where if 100 people own a contract on the LME, 99 would get cash settled and 1 would get physical if they all stood for delivery. On the COMEX, it's even more, maybe 300 to 400 times. So it's a big deal, Alex. It really is.
Yeah, it definitely seems like something big's going on with the banks buying so much gold like they are, the Bank of Hungary and all these other banks. It seems like they're almost.
And the fact that it was reclassified. The fact that it was reclassified makes the buying of it more substantial, because now there's only two tier one reserves, dollars and gold, riskless. It's a big deal.
Yeah, I definitely agree because, you know, they've been keeping the dollar on top for a long time, and now they're saying gold is a tier one asset. It almost seems like there's going to be some sort of big thing that goes on in January 1st.
Well,
So,
think about it, just real quick.
yep,
And the fact that the central banks have been buying it and taking possession off the Bank of England and the New York Fed and buying it since 2017, doesn't that even underscore what you just said even more? Like something big is going to happen. And if we think so, well, it would certainly make sense then that the most powerful, influential, and in the know people have been positioning for 4 years ahead of whatever big is coming. That's why the big money always wins, because the big money sees the playbook. It's like in football, in the huddle, they're deciding, or they're talking about the play. Everyone knows where they're going. The defense has to react to the offense's playbook. Well, if you look here, the big money has a playbook, and we, as the defense, have to react. Don't listen to what they're saying, just watch what they're doing. And to me, that's the big takeaway here.
yeah, I have to agree with that. And what you've been saying, actually, Andy, leads me to a really important question. So when will the banks lose the power to manipulate gold and silver?
Alex, the only way you can successfully manipulate a market over an extended period of time is to push it in the direction it's going. And when you see global demand accentuating to the way that it is, really accentuating, when you see Ed Moy, the former head of the United States Mint, recently came out and said, not only are the banks manipulating the price of metal, but that there isn't enough metal on the COMEX market to be delivered if everyone stood for delivery. So you have the former head of the U.S. Mint saying this. You had the U.S. Mint come out and say there's a global silver shortage publicly. Now they backtracked a little bit and said, well, it's just a silver blank, which I don't believe. I believe they said that because they got a lot of heat. How about the COMEX market? Let's talk about that for a second. Now, there was about 38 million ounces delivered this delivery month, or at least at the beginning of July 1, for the June contract that went off the board. But 5 days before the end of the contract, and then the COMEX can always whittle it down by dropping the price down, and a lot of the people get margin called and they close out or they roll it forward. But 5 days before, June 24th or 5th, there was 220 million ounces of open interest on the COMEX. That means long contracts, 220 million. And if people want to stand for delivery, you can. Otherwise, you roll it over to the next delivery month, or you cash settle, you sell for cash. So, but if everyone would have stood for delivery 5 days before July 1st, when the June contract goes off the board and deliveries start, there was only 110 million ounces in the registered category. So there was twice as much potential delivery as there was silver to be delivered. You look at the SLV prospectus, February 1st or 2nd, in the midst of all of the craziness, when there's so much demand, they come out and change their prospectus and say, well, because there's so much demand, there may not be as much silver behind the number of shares issued. That's huge. So you look all the way around you. Now, how about let's go to the very top of the food chain. And when I know we're just focusing on silver here, but the same thing is true for gold, okay? And maybe even more so on a big scale, but no, not more so. But in fact, silver much more so. But gold, the argument is exactly the same. But how about to the very top? Over the last 2 years, as a global community, we've mined somewhere around 800 million ounces of silver, yet the demand has been north of 1 billion ounces. Over the last 2 years, we've seen almost a 500 million ounce shortfall between supply and demand. Now, silver is found in nature in something called epithermal, Alex, very close to the surface. The big deposits were found long ago. Only 30% of all the silver mined comes from primary silver miners. So out of 800 million, 240 million come from companies that just mine silver. The rest of it, 560 million or so, comes from byproduct mining of other metals like gold or copper or tin. And oh, look, we found some silver. What I'm getting at is that in general, it's a depleted asset that's in a continual deficit from the very top on down. You look at COMEX, which is a notch below where the price is set and the biggest traders trade. With 5 days left, there was twice as much in open interest as there was silver that could be delivered. That's what the Hunt brothers noticed in 1980 and tried to corner the market. You look at the US Mint, they haven't made a silver eagle in over 3 months. Now they are releasing their type 2s here next week. But everywhere I look, Alex, I see shortages in supply. And if you look across the globe, Alex, roughly 0.5% allocation to precious metals in people's portfolio cumulatively. That's nothing. 0.5%. So, I mean, that means if someone has $1 million in investments, 5,000 in precious metals. Well, that's on average. What if that number goes to 5% or 8% like it was in 1980? Well, that would be a 16-fold increase. You know, I guess I'm just simply saying this. We are entering a period of time, Alex, where currencies are being eviscerated, where most financial assets are at all-time highs, and people would be hard-pressed to really make an argument that the valuations are justified in equities, in fixed income, bond market at all-time highs against interest rates at all-time lows, a stock market at all-time highs against the economy that's been all but destroyed, where almost 150,000 small businesses were closed. No, they can't hold it down. And yes, it will go up. And when I look at all of the things we've talked about as a company, Alex, for 31 years, they've all come true. Never when we thought they would. Often, many times, years later. But the reason they did come true, and the reason that will come true also, is because these types of decisions or prognostications or theories or whatever you want to call it, well, they're based mostly and rooted mostly in economics and mathematics with a sprinkling of old school logic. These things will happen. When you see the biggest money in the world, both from the central bank down to the huge amount of deliveries we're seeing off of COMEX, mostly by sovereign wealth funds and family offices, when you see the biggest money in the world accumulating and taking possession of, whether it be off the New York Fed, off the Bank of England, off the COMEX, off the Shanghai Gold Exchange, the biggest money in the world is taking possession of metal. So the price is less relevant. In fact, I would argue, as trite as this might sound, price is the biggest tool of misdirection. The big money knows most people are lazy and all they look at is the price. And they don't take the extra time to look under the hood and see what's going on under the hood. They just look at the paint job. Well, because that's the case, the big money is able to misdirect the public through manipulation of the price. And as they push the price around, you're seeing the biggest banks in the world and the hedge funds taking huge positions at subsidized prices. It's classic misdirection. It's the no-look pass in basketball. It's just like any game you've ever played, Alex, from chess to baseball to football to anything involves misdirection. You misdirect your opponent. In football, you fake a handoff to the right. Everyone on the line goes this way, but the tight end sneaks out this way. And so everyone's looking over here, but over there's one guy wide open. You misdirect. In baseball, it's the hit and run or the squeeze bunt. In chess, you send a pawn up this way so the queen can flank that way. Everything is about misdirection, including big business. One of the things you and I have never talked about is a book that that has influenced my life in big ways, and it's called The Art of War. Are you familiar with it?
Yes, it was written by a famous Chinese general.
Sun Tzu in the 5th century BC. This book is revolutionary. It's taught in almost every major business school in the world on corporate hierarchy. It's taught in almost every major law school across the globe for formulating arguments. You know who Bill Belichick is?
No, I do not.
Okay, well, you must not be an NFL football junkie like I am. Bill Belichick is the head football coach of the New England Patriots, and by many people's estimation, the best football coach ever in the history of the NFL. He's won like 6 or 7 Super Bowls. Legendary. He uses the book The Art of War to formulate game strategy. It's mandatory reading at West Point, mandatory reading at CIA. And the whole premise of the book is how to beat your opponent without throwing a punch, how to misdirect. And misdirection is very prevalent, and people need to understand that if all you're ever doing is looking at the price, pardon my French, you're screwed. You need to take the time to see the fundamentals. And the fundamentals are simply this: biggest money in the world is accumulating metal because it's been classified as tier 1. It's being held down. It provides great value. It's being accumulated by central banks, by commercial banks, by sovereign wealth funds. The price means nothing. It's noise. It's misdirection. Look at what the biggest money in the world is doing and you win.
Yeah, I think you're right. We see the media pushing up things like Bitcoin and all this stuff, saying the price is ballooning, going up like $10,000, like, all this stuff. While they're talk down, the media tries to talk down gold and silver because, like you're saying, it's misdirection. The banks aren't buying Bitcoin, they're actually buying gold and silver. So I think you make a really good point there with what you're saying about the art of war and everything else. So do you think on January 1st, like we were talking about before, do you think the banks will stop manipulating gold and silver, or what exactly do you think will occur?
It's a good question. I don't know. I think it'll have a major impact. I think there will be fewer banks doing this, that the risk to them is too substantial, that when you're dealing with unallocated massive positions in metals in a world that's trying to de-dollarize, in a world that's afraid of financial affairs and global events and geopolitical events, and the world is accumulating metal. And so, like, for example, the banks used to short palladium, but the supply of palladium got so tight, and Russia controls the majority of the supply, that they stopped messing with it. And now it's trading at like $2,500. I would argue that silver and gold have the exact same type of backdrop, silver more than gold. And so eventually, we will see, I think, a much more accurate semblance of price discovery. We hope it happens January 1st, but when you've been fooled and tricked as often as I have been in 30 years by these guys, sometimes you feel like the little boy who's cried wolf. But I'll remind everyone, at the end of the story, the wolf comes. So whether it happens January 1st or before or after, we are entering a period of time where I believe you will see it too dangerous of a market for the big banks to naked short large amounts of metal in this environment, which I think is only going to get more and more acute in the need for people to own it. And if you're shorting naked, meaning you don't own it, and things are getting as crazy as they are, yeah, let's hope January 1st is that day. Don't know it to be for sure, Alex, but I'll tell you, it's a big deal that they won't be able to accumulate massive positions in unallocated metal, and it will be zero against liabilities on their balance sheet. That's a huge deal.
Yeah, I agree. So I want to get into this really quick. I thought it was pretty interesting. We're seeing I'm going to share my screen here with you. So we're seeing a peaceful revolution across the United States within certain states that are basically going against the US dollar, saying that they're going to make gold and silver legal tender, such as Louisiana, Texas, and Utah. So I want to see what your thoughts on this and how this will affect everything that's going on.
I think it's fantastic. I mean, look, the Constitution of the United States says it's illegal to issue anything that's not species, which is gold or silver. You go back to the Constitution, gold and silver are money. Remember when we talked last week about the 5 characteristics of money? And gold and silver are money. Paper currency, or the money in our, what we call money in our wallet, is currency. I think it's really amazing that these states are going back to sound money. And, you know, maybe you have politicians here who are saying, what the hell are you guys doing to the value of our dollar? And, you know, and they're looking out for their people in their states. We are destroying the value of the dollar. And, you know, look at inflation. They call it transitory. That's BS. It's up it's at 5% this month on the CPI, but John Williams says it's 12%. Look at the price of lumber and beef and insurance and tuition. And I mean, go to a restaurant, it's ridiculous. Everything is, buy some fruit, or everything's getting expensive. And it's because they've created trillions and trillions and trillions of dollars in the last 18 months, over 9 trillion. In a country that took almost 300 years to create just under 1 trillion, about 800 billion. Took almost 300 years to create that much wealth in this country. And in 18 months, they create 9 trillion. Trillion seconds ago, 31,688 years ago. The numbers are so big, it's ridiculous. So, you know, you need to look at things in a macro perspective this way. The micro is interesting, but macro is where it's at, because you can see the big picture. And maybe the fact that, you know, some of these politicians, these local state politicians, understand what we're talking about. And this is their way of protecting their citizens, that, hey, if our federal government is going to destroy the dollar, then here's some real wealth for you. Now, getting shop owners to take it and to be paid back, I don't know how we probably get paid back in dollars or change, but the state of Utah, I think, has these gold notes. They have like I don't know how much, like 1/100 of an ounce of gold embedded in them. They're kind of neat. So it would be wonderful, ultimately. And maybe that's why they reclassify gold as tier 1. Maybe that's ultimately in the playbook. Maybe we're going back to gold and silver as real money. It'd be wonderful if that were the case.
Yeah, I agree. It seems like there's this peaceful revolution against the dollar, like you were saying earlier, with everything that's going on. Basel III, it's actually a tier 1 asset again, gold, and we're seeing states do this. So I think it's a pretty big deal for everyone who's watching and seeing this. And one thing I wanted to ask you, you talked about it a little bit. So how do you think, the logistics of making people accept gold and silver again, and like from stores and stuff? Do you think it'll be basically just going back to the pre how it used to be when the government used to accept gold and silver? Do you think it will go back to that with stores and everything, or what are some of the logistical problems that will go through?
No, I don't think it'll happen that way. I mean, if I had to guess, they would issue a digital Fed dollar, Fed coin on your iPhone, and it would be backed by gold to a degree. I think, first of all, if we're using gold as a new system, it would have to be 5,000-10,000 an ounce for sure. There's no way that they would have the latitude to be able to transact monetary policy. That's why guys like Jim Sinclair say it'll go to 5,000 or 10,000 an ounce and never come back down, because it'll be pegged to a new system. But unlike 1933, you can see up there, that's Roosevelt. That's a $10 gold certificate where it says payable in gold to the bearer on demand, a $10 gold Indian, and the executive order he used to confiscate gold. So back then, you could go into a bank and you could trade the $10 note for a $10 gold coin. That's called convertibility. I don't think it'll be convertible. I think instead it would be backed by it, and potentially the validity or the veracity of the gold is held on a distributed ledger, and people can see it. So I don't know. I think that it's pretty hard for me to envision people walking around with gold and silver in their pocket to transact business. But I think gold will be part of the system to some degree. Why else would the biggest bank in the world, the central bank or central bank, reclassify it? Why else are you seeing the central banks around the world gobble it up? Does it mean it's going to be pegged to a new system? Maybe. Don't know. But I think there's a greater chance of it being like that, digitally backed, or like the Utah bills that have 1/100 of an ounce of silver in it, those kind of things, than actually walking around with a gold and silver coin in your pocket. You know, this is 2/4, here's 8 ounces of silver, but it's heavy and bulky. I mean, it's hard to do that, I think. So while gold will give the currency legitimacy, I think it's impractical to be transacting in it in 2021. It would be cool, but I don't think that'll happen. I think it'll be pegged to it, tied to it, not convertible. I don't think you'll be able to go into your bank like you could back then and trade it in. But if I had to guess, what they would do is the price will go way up, and then they'll peg it. Maybe 25% of every new Fed dollar is backed by gold. And here's the gold on the distributed ledger. And that 25% backing says, unless you have at least that much gold, 25% backing the currency, you can't create any more currency. So it keeps the currency in check. The 25% backing instead of 100% would allow the government more latitude to transact monetary policy and stuff. Well, maybe it's 10% or 20%, whatever it is, it's better than completely fiat like we have right now. So I think it'll be a hybrid of what you asked me and what I'm saying. Somewhere in between there, I think, is where the truth will come in, if
Yeah,
I had to guess.
yeah. So it definitely seems, at the very least, the banks are trying to preserve their wealth because they know the dollar is not going to be number one forever. So they're definitely preserving, all their wealth. So one thing I wanted to ask you, and for the viewers too, could you, was there a special on gold and silver?
Yes, and I've heard from a few of your listeners, and I hope they'll all email me. For now, I'm going to have them email me personally. Now, I can't do that forever because I get 300-400 emails a day, and I do lots of these podcasts, and I'm running a company. But because I like you and I want you to succeed here, I'm going to personally talk to any of your listeners who want to buy metal. They can email me specifically at andy@milesfranklin.com. The specials that we have, are you able to pull up those specials, Alex? Can you show the picture I sent you?
Yeah, I think so. Just give me 1 second.
We have 2 specials as you're looking for that. One is a gold $20 and a $10 Liberty, both just like we were talking about, pre-1908. There'll be 1907 and earlier. Most of them are from the 1880s and 90s. They're in amazing condition, but circulated. So these are circulated coins that were in someone's pocket 120 years ago, which is cool in and of itself, a true piece of Americana. Yet we're pricing them at $129 over spot gold for the 1 ounce $20 Liberty, and $64.50 over for the $10 Liberty, which is half the size, half the weight. These are coins that were minted from 1850 to 1907 that United States was built upon. And at the price we're offering them at right now, I don't see anyone in the country even close to it. Also, yep, that's it. So, and you can see they're a little worn and circulated, but you're talking something that speaks to you when you hold it in your palm of your hand. Like, I was in someone's pocket 120 years ago, and it's just really cool to me. At 129 over, I think it's one of the best buys in gold, period. Now, I didn't send you the one of the $10 Liberty, but that we have that also. The $10 Liberty, same time frame, 1908 and earlier. We'll talk about Noah here in a second. The $10 Liberty is also the same price, just half the price. Awesome coins. If you're buying gold, this is as good of a buy as you can find, and it's cheaper than the brand new American Gold Eagle. I've never seen that in 30 years. Normally, these would be 15, 20% above a Gold Eagle, not well below it. As far as the Noah's Ark silver coins, show that next one. These are made by the government of Armenia, yet they're produced by the Geiger Mint in Germany, probably the highest quality mint in Europe. One of my favorites for sure. They make the most beautiful 100-ounce silver bars you've ever seen, and 10-ounce. Really cool stuff. And they come in this beautiful box, but that's a box of 500. So they come in tubes of 20 and boxes of 500. At $4.50 over the price of silver per coin, Alex, that's the best price in the country. I see some of the cheap online companies selling this for as much as $6.50 over. So these are brand new 2021, super high quality, really nice. And when I offer specials, Alex, I try to make them just that, a special, rather than just another thing to offer. Both of these cases, I love them both. This is what pretty much silver rounds are selling for across the country, let alone a premium coin with limited supply or limited mintage. And then the $10 and $20 gold pieces, to me, is the best buy in gold right now. So, and priced that way too. So good stuff. If any of your listeners are looking for gold or silver, no order minimum. And we have an awful lot in stock. Everything's ready to go, ship immediately. And I'll try to do this for you and your viewers every Friday going forward.
Yeah, well, that's great. Yeah, if anybody who wants to get some coins from Andy, if you could email him and use the Free American Press name, that'll be really appreciated. And another
That's the most important part, is if any of your people email me in the subject line, Free American Press or Alex sent me, and we'll make sure that they get personal service and the best price in the country.
Yeah, that's great. And one thing I wanted to add is, the cool thing about these old coins too is that they also have collectability value. So even if gold goes down to some extent, they'll always have that collectible value, kind of like with the Morgan dollars and everything else. So I definitely think those are really good, good coin to have because of that within itself, the value, the collectible value. So yeah,
I agree very much. I agree very much.
Yeah. So it was really great having you on the show, Andy. Was there anything else you'd like to add?
Just want to say one more time, I admire you, kid. I really do, and it's an honor to help be here with you and or to be here with you. And there's something about seeing someone your age that's as tuned into this as you are that really it gives me great joy and optimism. And I think you were put here for a reason, and that reason is to help educate people. And whether they're young or old, the fact that it's coming from someone your age is amazing. And I hope people your age listen to you, because for 5,000 years, Alex, gold and silver have been wealth through every pandemic, through 2 world wars, German hyperinflation, the Great Depression of the United States, and they're still the ultimate immutable form of wealth. Whether it be pharaohs or kings or queens or emperors, every large or every person of nobility throughout all of time owned gold and silver, not as an investment, but as wealth. And I would like to just reiterate, when I talk about buying gold and silver, Alex, it's about wealth retention and preservation. Now, I would also say for someone like you, you can do wealth building with it. And that's how I built my wealth. I'm 50 years old, almost 51. And like I may have told you before, when I was 19 years old, starting the company with my dad, one rule only. And that is I buy something every 2 weeks or he'll fire me. Now I just opened this box in front of you, the stuff that I got here today. That's my 2-week purchase. I own the company. I'm the president of the company. He's been retired for a long time. He's not going to fire me anymore. But for 31 years, I've honored that, my word to my father. And I buy something every 2 weeks. It is my wealth. And it's wealth I hope I never need to use. If I do, whether it be for an emergency or an opportunity, I'm darn glad I have it. If not, my kids get it someday. And I think there are very few things that I can feel comfortable about leaving to my children and their children that'll be worth something, even in the year 3000, just like it has been for the previous 5,000 years. So keep up doing what you're doing. Get the word out. Talk to young people. And like I said, I'm thrilled to be doing this with you. Look forward to keep doing it week by week, and we'll make a good team together, Alex. And you'll keep me tuned in to what's going on in the world with people your age, and I'll help you navigate the road here with precious metals and economics, and we'll see where it takes us.
Well, yeah, that's really great, Andy, and I'll look forward to talking to you next Friday. And thanks for all who was watching the video. Thanks for watching, and just God bless everyone.
God bless, Alex. You take it easy, buddy. Have a good July 4th.
You too, Andy.